Let me start with the biggest boys, the big in the private and in the public space. What's your stance on SBI and ICICI?
Well, like I mentioned, the one thing that I'm very, very worried of is that when it comes to lending, any bank which shows aggressive growth is something that I would be suspect to. It's very easy to lend money, it's very difficult to get it back. And this is a simple caveat which I think many analysts and the investors tend to forget. So I'm not particularly fond of banks which grow very fast, and I think you're seeing that, for example, in SBI, where because of the rapid growth in asset that we saw in the slump years of 2008, I think the NPAs are now coming home to roost. So obviously there is a couple of years lag, but that's the way of the world in terms of banking. So as I mentioned, anything which grows at a steady 20% or 25% rate, something which has been doing that for the last 5 or 10 years, is the place to be. And it doesn't matter what happens to the rest of the world, because a bank can organically grow 20-25% if it is well managed without taking inordinate risk. Anything more than that, you have trouble. Anything less than that, you're probably not going to get any major market returns. So from a point of view of the market, however, obviously you also have to keep in mind that the banks which are larger have a greater ability to raise capital. So no matter how stressed the balance sheet, their ability to survive is a lot better than a smaller bank which is perhaps less stressed but is not in a position to raise money. So coming back to your question of SBI, frankly SBI is equivalent to sovereign risk in this country, and the one area of somewhat discomfort is that over the last couple of days the credit default swaps of SBI in the national markets have gone up by almost 40 basis points. Just tells you that the risk is still being perceived as going up, not coming down. So I would still think that SBI may continue to remain weak. ICICI Bank has done a little better in terms of turning around its operations, and I think unfortunately it is again beginning to try and grow, which is a problem in today's market. I think prudent strategy would be to let it just be there and grow with the industry or perhaps slightly slower till the storm blows over, and then obviously with the kind of market share that ICICI has, they can easily ramp it up. So between the two, while valuations are almost at par for both of them, I would think that the downside perhaps is a little more in SBI near term, only because of the fact that it's a proxy to India. ICICI has been a little bit of a less in the limelight, as it were, for the last few months, and therefore to that extent maybe a little better performer. But when you're looking at near term, you have to look at what the charts tell you, and